analysis. I believe that fundamental analysis seems like very simple terms, but in today's topic, we will actually try to let you guys understand what should be happens in 2024, what already happens and affects the market, and what can we expect next? How can we prepare, especially after Donald Trump win the US president elections? What can we expect next from the Donald Trump, and what can we expect next for the overall fundamental analysis for the global future trend? So for today's topic, we will let you understand the storyline in the market and hoping that this storyline able to help you enhance all of your trading journey. So this is a key topic that we are going to discuss on today. The first thing is we will talk about the Donald Trump elections, and then we will also let you guys understand some important economics data. Economic data is one of the major things that are going to affect movement for multiple different types of asset classes. So we will let you understand what is the crucial economic data that you need to be understand on it, and how can we apply it later. And just a kind of reminder, we do have a very important US economics data, which one we call the US Consumer Price Index data. Is US CPI data that is going to release later, and we are expecting it might be trigger a significant movement specifically on the US dollar as well as for the gold. Later, we will also let you understand what is the US CPI data, then how can you trade during this high impact event. And then we will also let you understand not only inflation data is very important, employment data is also important, as well as the US GDP report. So this is the things that we will explain later. And then how will this economics data performance is going to affect the monetary policy from the Federal Reserve. After the economics data have been released, if the US economy is good or if the US economy is bad, what to expect from the central bank or the Federal Reserve. This is also the major things that we need to continue eye on, because monetary policy decision, which means that, or another term is like interest rate decisions, is going to affect the currency movement aggressively. So for example, if the central bank decide to increase the interest rates, the currency might be normally going up and vice versa. So monetary policy decision is one of the things that we should be focused on, especially now. This should be one of the hottest discussions around the world. After the monetary policy, we will let you understand what is the relation between interest rates and exchange rate. Why the increase of interest rates will normally cause the currency to be going up, or why if the Fed cut interest rates, the currency will be going down. These are all the things, discussions that we are going to talk about. And then we will also let you guys understand geopolitical tension and how will it affect on different types of asset classes. But specifically, we will more focus on the gold market. So for example, after Donald Trump becomes the US president, what is he going to do and how will it increase or easing the geopolitical tensions and what to expect next? This should be a very eventful trading journey for year of 2025. So it's better for you to prepare right now and then get a full preparations before we enter the new year. So today we hope that able to help you to go through everything and understand some of the key market fundamentals. And also some of you might be a new trader here, so I might give you a very quick explanation on what is fundamental analysis. So fundamental analysis is actually discover underlying forces behind currency movement, essential for grasping economy, political, and social factors. So for this one, is also we need to understand the fundamental in order for us to predict a long-term trend. It's very important because after we understand the full storyline in the market, we can try to apply with the technical fronts and then decide whether, like for example, currently we understand that after the Donald Trump become the US president, cryptocurrency is very good. So you can notice that BTC after Donald Trump win is actually increased aggressively and even more than 30%. From the previous 68,000 increase until now 87,000. From fundamental front, we understand why BTC increased sharply because Donald Trump mentions he's going to support the cryptocurrency aggressively. So this is a storyline that in the market, hovering around the market. But we can actually combine this storyline with the technical front. It's like we understand the BTC should be great after US Donald Trump win the president. But what is our good entry point? And if we enter the trade, what should we expect next? What is the target profit? And if you want to do a very good risk management, what is the potential stop loss level that we should be setting on? So by combining the storyline, which means the fundamental line in the market with the charting tools, it will be able to benefiting us from trading perspective as a whole. So fundamental is very good because after you understand the storyline, you can try to combine with technical front and then decide what is your good entry point. Later, I will show you some of the example later on the live analysis. And then I also understanding that recently the market movement should be very, very huge. The volatility is very high. And if you want to understand the market should be very, very confusing for everyone. So we do have the resources for you guys to be analyze on it and then reading through it. Because maybe if you go through Bloomberg investing.com routers, it's very good, but it might be confusing because the articles are too much. So as a pure analyst, we actually summarize everything that affects the several major market movement combined with the fundamental as well as technical fronts. So you can go through our website to receive all the fundamental information, and then we hope that able to help you during your trading journey. So normally you can go through the pureprime.com and then you go through the research front, quick market insight. Then we will update it every day. So everything we are going to update in the market to let you understand what's going on, what is the storyline. So this is one of our resources that we will be provided to our clients. And then we also do have the Telegram group. But inside the Telegram group, our analysis should be very, very short because we are targeting the quick reading audience. So Telegram group later, we will also share you a link that if you are really interested on trading and receiving this kind of trading news, you feel free to follow our Telegram, which just, feel free to follow our Telegram. We will try our best to update a lot of information and very, very solid information as we can for you guys. And then we also will do launch the webinar every week. So every week, we also will give you guys a very, very brief market analysis webinar to let you guys understanding how can we combine the recent fundamental towards the technical, then how can we trade. So this is the resources that we should be given to you guys to hope that this able to help you enhance the overall fundamental fronts, fundamental knowledge. So this is all the things that we can be provided. And then now we are going to discuss on the post-US election impact. So as you guys know, last few days, Donald Trump is actually winning the US president. Kamala Harris is losses. So this party, what is he going to do? And what can he affect the overall different types of asset classes? So the most obvious one, right, is you can notice on the dollar movement. So after Donald Trump become the US president, right, initially before the elections and even during the elections, the trend for dollar is actually not very good and dropped a little bit one. But once Donald Trump win the election, you can notice that dollar is actually flying up aggressively. The overall reason why the winning of the Donald Trump is going to provide such a positive impact towards dollar, we need to we need to focus back on their policy, especially Donald Trump policy. So during the presidential speeches previously, when they want to compete with Harris, Donald Trump is actually mentions a lot of things that could be beneficial towards the US economy in a very short term, but it might be affect multiple different types of countries, specifically China. So when these things happens, right, a lot of investors might be expecting that Donald Trump might be very pro-US, supporting the overall US economy, despite it might be hurting other countries. That's why a lot of investors decided to enter the dollar market. And this is one of the reasons that caused dollar going up aggressively. As comparison with other G7 currencies, specifically from like GBP USD, EUR USD, right? We can notice that this pairing is actually dropped one because investor confidence towards US remains strong after a lot of tariff plans have been imposed. Overall economy might be slowed down, and especially the targeted country, UK, EU, and currently the overall economy prospect is already quite pessimistic already. With this kind of combinations, investor confidence towards this currency will be dropped, and that's why pound sterling, euro continue to drop and dollar went up. So to explain in the layman's terms, when Donald Trump imposed tariff, right, other countries might be affected, but beneficial on the US. So these are things that could benefiting the dollar demand. The next thing is regarding on the potential inflation risk. So for example, when tariff is imposed, it might be increasing the cost for supplier or other countries. So higher costs will normally cause those bosses to increase their product selling prices. So higher product selling prices will actually lead toward the inflation risk. Later, we also discuss on what is inflation and why is it so important for us to understand inflation, because understanding inflation is crucial for us to monitoring and understanding the market and what to trade. Inflation is a very important thing that we must be eye on. Maybe we also discuss about dollar demand with Trump policy, and then this is the things that are going to benefiting on the dollar. So with these two big reasons, dollar recently continue to going up, which prompt other asset classes like the gold market to drop. Two things because of the potential tariff, maybe will benefiting the US economy, so dollar going up. The second thing is this tariff is going to cause high inflation risk in the United States. Market participants are actually expecting the Fed might even maintain or increase interest rates moving ahead. So this is the biggest push towards the dollar, and this is why dollar recently continue going up. When dollar going up, the market like the gold drop. So this is a big thing. All right. But of course, the biggest movement on Donald Trump, so the Donald Trump elected to be on the BTC market. Recently, BTC is really going up aggressively because Donald Trump keep mentioning that he is going to support the crypto market after he been elected to the US president. So according to the crypto charts, we can notice that a lot of market participants are actually quite buying it. But the risk still remains because this is some statements that Donald Trump provided before the elections. We need to monitor on what is he actually going to do after the elections and what kind of speech that he's going to be provided. There will be a chances for the cryptocurrency, specifically BTC, drop back aggressively if he suddenly give another things like I'm not going to support the crypto market, and then this should be the things that could be affects the overall crypto. So even though currently the overall long-term trends for the BTC still remain very solid and very nice, right? But the risk still remains. All types of investors are actually eyeing on the potential Donald Trump speeches before they entering the market. So when we understanding that the overall BTC, the cryptocurrency view is very confusing right now, what are we going to do? We can try to apply with the technical front. So as for now, you can notice BTC is actually hovering and trying to form this double top. Later we will discuss specifically on the BTC trend. So this is a storyline after Trump win, what to expect next. You guys might be confusing that why the gold prices do not increase, because normally tariff will normally increase the trade tension, specifically between US and China. Their relationship might be worsened. But why the gold market haven't going up? Investors as for now still waiting for it. But if in future basis, Donald Trump really impose a lot of tariffs towards China, and China react to it with tit for tat. For example, China impose back the tariff towards the US, then this should be the thing that could be supporting the gold prices. So even though the overall trends for the gold continue to drop aggressively because of the appreciation of the US dollar, but things might be changes in the future. But when will it change? We don't know, because we are not sure when will Donald Trump give some speech. And then what is he actually going to say? So this is the things that we need to continue monitoring on it. And this is one of the important fundamentals that are required for us to be focused during our whole trading journey. So very important on what Donald Trump is going to give his speech in the future basis. And then next thing that is going to affect the global currency should be on the economics data, because as comparison, right? For example, if you want to compare with the stock market or the equity market, company analysis is what we are going to mention on. Of course, we will try to pick the best company, the company that are going to earn a lot of money. We might be buying their stock and invest on it. So how can we track and how can we choose the best companies around the world? It's like according to their financial statement, we need to know how much they are earning, how much cost they are actually suffering from, and then what to expect in future, whether this company is going to grow or not. So this is something that we should be understanding on it. But it's quite different. As we notice that when we are trying to invest in countries, the analysis should be different from company, because when we want to invest in country, we need to choose the best countries to be investing. So what is the best country? Best country is we need to monitor on their economics data to see how is this country's performance, whether the economics data is good or whether the economics data is bad. So we're trying to pick on it. So normally, for example, if the economics data in US, we give all the positive rating, which means that this company worth to invest because it's making money. So same go with the US. If US economics data is great, then people will be investing on it. And citing that recently, the prospect economy combined with the recent market analysis from the US regions, overall US is very, very good, right? So dollar continues going up. So this is why economics data is important, because we need to understand the financial situations on it and choose the best country to invest on. All right. Yeah, tons of different types of economics data that we need to be understand on it, of course. And we try to summarize the most important one, which the first one is the employment, the second one is inflation, the third one is the GDP, the gross domestic product. Employment data is very simple for us to track because understanding employment data is like employment data measure the labor market's health and the economic performance. Increased job figures signify a strong and growing economy. It's very simple. Job market is one of the very important things, important economic indicator over the country. If a lot of people are getting job, which means that they might get salary and they might richer. And if the bosses, the employer are hiring more people, which means that their business is very, very good. So one of the major indicator to predict and to understanding whether the overall economy is good or bad, the job figure is very, very important. So yeah, tons of the job figure that we need to be understand on it. Of course, the first one is the non-farm payroll, unemployment rate, average earning index plus bonus is the key things. So non-farm payroll, we will normally give you guys employment, the non-farm payroll webinar monthly to prepare you guys. So stay tuned on it. We will try to analyze how will the US jobs health recently. Then we try to predict the NLP rating and prospect. So non-farm payroll, those who are new trader, feel free to Google search it. But you can understand it as a very, very important US jobs report that we need to be understand. And then by using it, we're able to do and enhance our trading. Okay. So yeah. And then and then the next thing that we are going to talk about is the gross domestic product, is what we call the GDP. And then GDP is something that one of the important data that measure the growth rate of monetary value of all goods and services that are produced within the country in a specific time frame. This is something very, very important for GDP. GDP, you can understand it as the overall the country's revenue, how much the country is going to earn, and what is the earning growth percentage. Or to put in a simpler term is, you can think GDP as your salary. So if your salary is higher, which means that GDP is higher, you are richer. So this applies towards the country. From GDP is actually encompass a few factors, which including the private and public consumptions, government spending, investment, and net export. To explain in the simple term is GDP is actually including the spending, consumption, the public and private spending, consumptions, government spending, and investment and net export, which means that if this country, a lot of people doing all types of activity around here, it should be richer. So, but you don't have to go through all the detail about this. No, you can just monitor on GDP data and see whether this GDP give a very good result or the bad result. Okay, so this is something that we need to understand. And then the last one is very important one is regarding on the inflation. Inflation is a situation that very hot topic that we are going to discuss right now. After the US elections, the next focus is how will be the inflation rate in the United States? How will Donald Trump affect the overall inflation? So if inflation is very high, it's actually bad for the overall economy, and the Fed should be controlling it by increased interest rates and directly affect the currency, might be going up the currency. So, and vice versa. So inflation is something that's very important. You can understand inflation as what? You can understand inflation as the price of goods sold, the overall price of goods sold. So inflation is high, the price are very expensive. So this should be not beneficial for the global economy, because imagine If the thing inflation is very high, but your salary are not able to catch up. For example, your salary growth should be like 5% to 10%, but inflation is 20%. So no matter how hard you work, but the price will be more expensive and more expensive, people will be suffering. This is why we need to understand that GDP and inflation should be balanced. GDP you can think as a salary. GDP growth sometimes should be higher than the inflation in order to catch up the price. So your salary increment should be increased sharply in order to catch up the inflation's growth. So GDP and inflation, we need to understand these both situations. And then from the Federal Reserve perspective, right, they will also monitor the inflation rate. If inflation is too high already, they believe the GDP is not able to catch it, the salary growth is not able to catch it, then they will impose the policy. What's the policy they're going to impose? This should be the interest rates. Interest rate decisions from their monetary policy from global central bank. Interest rate is something very, very interesting because when the inflation is too high, right, this should be because the central bank should be coming out and this should be increasing interest rates. Why? So one of the solutions to solve high inflation is by increasing the interest rates, because when the interest rates are increased, right, people will save more money because deposit interest rate will be increasing. And then if they want to expand their business, they want to spend more money to buy a house, it will be very, very expensive. So it will reduce their consumption. So when inflation is high, they will try to increase the interest rate. Both things, one thing is deposit rates going up, will prompt people to save more money, less cash on hand. So lesser spending, stabilize GDP, and then inflation will be stabilized back. As I mentioned just now, right, inflation will be high when a lot of people do consumption or do their spending. So when high interest rates, normally they are not going to spend their money. They are going to save even more of the money because saving rate are higher. Prefer save money now, and then borrowing rate are more expensive. So with these two combination, right, inflation will be stabilizing it, and then the price might not increase sharply, and then GDP able to catch up. But from a trader perspective, right, how can it link to us? So we need to understand on the interest rates. This is a thing going to affect a lot of the asset classes movement. The first asset classes movement should be on the dollar, the currency movement. And then the second asset classes movement should be on the gold market, the BTC market, as well as the stock market. So for example, when one central bank increases the interest rates, that currency will normally going up one. Why? It's because you can imagine interest rate as a saving rate or the risk-free return. So for example, if interest rate is very high, when I save money in that bank, I can gain more money from saving on it. For another example, I'll give you a country comparison. From Japan perspective, if the Japan interest rate should be like 1%, if you save money in Japan for 1,000, the Bank of Japan is going to give you $10. As comparison, if you save money in US interest rate should be like 4%. So for example, if you save money in US, it's going to pay you back 1,000 ringgit, $1,000 is going to pay you back with $40. So of course, you are going to pick with US, right? So indirectly way, normally investor will save their money in higher interest rates countries. When these things happens, right, higher interest rate country, right, so currency will be increased because, for example, if I'm from Singapore, I will try to shift my portfolio from Singapore, sell Sing dollar and buy US dollar in order for me to save it. So dollar might be going up. So you need to understand the interest rates expectations on it. Okay, this is something very, very important for us to know. From traders' perspective, you need to understand the interest rates and link towards multiple different asset classes. Of course, this is the key things that it requires a lot of things for us to predict whether the Fed is going to increase or decrease interest rates. That's why we need to monitor on the economy data to see whether the inflation is too high or too low. We need to monitor on the policy from Trump. We need to understand the Federal Reserve perspective by understanding their statement just to predict one thing, interest rates. Once you're able to understand the interest rates, and you expect that the country is going to increase interest rates, then maybe you should be considered to long the currency on it. Okay, so interest rates, inflations are linked. So trying to understand the situation. So as I explained just now, high interest rate will normally cause global foreign investors to seeking higher returns and invest on it. And then when country raise the interest rates, it will become more attractive for foreign investors to invest in country financial assets. So this is something that we need to understand. So now we are going to move on towards what is the you prefer the foreign. And then now we are going to understand on what is the expectation from the Fed. Will the Federal Reserve increase the interest rate or not? So this is the key thing. According to the CME Fed Watch, the Fed is going to cut interest rates by 25 basis points with 66%. But normally cutting interest rate will cause dollar to go down, right? But recently dollar continue going up. It's because of previously, right? Market participant is actually expecting the Fed might be even cutting the 50 basis point of the interest rate, negative 50 basis point of the interest rate. So previously, I think just 1 to 2 months ago, market participants are expecting the Fed will cut 50 basis point. But until now, more than 50% are expecting the Fed will only cut 25 basis point. What does it mean? It means that the aggressiveness for the Federal Reserve to cut interest rates is already eased now. The Fed might not going to cut interest rate aggressive already. And you can also notice that this probability, right, keep declining one, especially after Donald Trump win the election. And we cannot rule out any possibility that after Donald Trump launched a tons of policy which could be lead out of higher inflations. And this is something that's going to fight the interest rates. So this is something is very important. So if this 66% keep going down, right, until maybe 20% of 25 basis point, and then even they maintain the interest rates, probability of any interest rate increasing, dollar will be also going up. So it's not just increase the interest rates, the dollar will going up or what. It's just like the expectations on it. Even previously, they expect they will cut interest rate aggressively, but until recently, they expect the Fed will only cut interest rate just a little bit. It's actually going to beneficial the federal dollar, the US dollar. So this is one of the reasons why CME Fed Watch 2 is very important for us to monitor. And normally, this is the things that will be affected by the economics data, and then as well as the Federal Reserve member statement. So now we are going to analyzing some of the data trend. So first thing is economics calendar that we need to be understanding of it. In this week data, we do have a lot of economics that are very important, especially later, you guys need to stay tuned on the CPI report. Just now I mentioned, right, CPI means the inflation data. If the CPI data is very high, what does it mean? The inflation rate in the US is very high, and what will it cost? It will cost the central bank to increase the interest rate in order to slow down the inflation spike. So with these expectations, dollar might be going up. So to short term, the layman to answer it in the layman terms, right? When CPI is high, dollar might be beneficial on it, and vice versa. If CPI is low, the Fed might not increase the interest rate, and they might even cut it in more aggressively, and then dollar might be going up because of the lower interest rate. So CPI report is very, very important. Of course, this is just one thing. Of course, if current situations might be different already, we're not sure how the institutional investor is going to react towards it. But historically, it's like this. But of course, you shouldn't all in your capital on just one economics data to trade. Just a kind of reminder, this data is the market movement, especially CPI. New trader better don't try. Experienced trader better do your good risk management. And if you want to try, don't try to over trades. So it's something that's very important. It's going to release just after 1 hour. Key highlight event, the US CPI report. And then we also do have tomorrow data. Initial jobs count is one of the US job report. And then we also do have the PPI report, another inflation report. So after Donald Trump becomes the US president, this should be another huge event to be expected. Should be mostly data dependent until Donald Trump is suspicious. So all this economics data, if the result is higher and better than the market expectation, it should be beneficial on the dollar trend. But of course, if the result is much worse than the market expectation, then dollar might react in others way. And the key note that initial jobs claim, right, is different with others data. Initial jobs claim is some data that when the higher reading means not good for the overall US market, because initial jobs claim, you need to understand it as unemployment benefits that people claim from the government if they don't have any job. So when this reading is very high, which means that there are a lot of people are jobless, they don't have any job. So they go claim from the government. So initial claim in others ways, the higher the worse for the overall US job report. But others data like CPI data, PPI data, and on Friday, we do have the GDP data from the UK region, the retail sales data from US region. All this data is the higher the better. So you need to monitor. Specifically, you should just focus on the 3-star data. So very important for us to be focused on it. And then it's not just the economics data is very important. Geopolitical tension is also something that's going to become a very significant and very important fundamental that we need to understand on it. And I expect this should be another key focus in the whole year 2025, because we're understanding that Donald Trump might be going to impose a lot of tariff towards multiple countries. Then how will this country react to it remain unknown. So we could be expecting that this should be creates multiple geopolitical tensions, trade tensions around the world, affect the global economy. When things really happens, what can we focus on it? Of course, gold as a safe haven asset should be one of the considerations, even though recently it continued to drop back. But if the tension remains, the geopolitical tension become higher and heightened, this should be cause investors to stop their shift towards the safe haven assets, such as the gold. So you need to eye on it. Even though gold drop aggressively right now, it doesn't mean that you should ignore it in the future basis. If you notice that Donald Trump really launched a lot of tariffs and a lot of countries react to it, this is something going to benefit on the gold market. And specifically, we can notice that previously, after the previous US elections, right, 2020, right? So when previous US elections, when trade war has been launched, right? Gold prices are most beneficial from it. So this is why we should be continuing stretching on it. It just Donald Trump keep quiet now, and China still do not do any reactions yet. So the movement will be slow, but in future basis, this is something that will for us to understand. So rising geopolitical tension should be beneficial on the gold market. All right. So I assume this is all the key things to summarize up. First thing, we need to understand where can we obtain all the information. Information you can able to obtain from our website and of course Telegram group and webinar. Every week we will conduct a webinar for you guys to let you guys understand the situations in the market and enhance your trading journey. This is the resources that we hope that can be able to help you. And then next, focus on 2024. End of the 2024 and 2025 is the post-US election. What will Donald Trump going to do? And how will the real crypto policy that they are really going to implement in the future basis is the key things. And then after you understand the Donald Trump policy, you need to understand the economist data as well. What is the key economist data we need to understand? The first one is employment, the second one is the GDP, the third one is the inflation. High inflations and low inflation is going to cause the central bank do a lot of things policy. So for example, if the inflation is very high, the Fed is going to increase the interest rate, and this will be normally beneficial towards the currency and vice versa. So it's a key things that we need to understand the relationship between interest rate as well as exchange rate. And then we need to understand the data recently. And this week, you need to monitor on the CPI reports, initial and PPI. CPI is the key one. So after 1 hour, you can try to monitor the dollar movement as well as the gold movement. It should be huge. And then geopolitical tensions. What to expect next after Donald Trump becomes president? Tariff have been imposed. Any countries is going to take for tax for it. So geopolitical tension is also something that will for us to focus. If rising tension, what can we focus on? First one should be on the gold markets. Okay, so sometimes it's really good for us to combine fundamental and technical to check together. Specifically for the cryptocurrency, we understand the prospect of crypto is very good. But as of now, you can also notice that this shouldn't be a very good activity already, because investors and market participants are actually struggling around this range. They're not sure whether the crypto have any potential to going up sharply or not. That's why you can notice the trend for crypto slow down and trying to form this upper top. So if you want to refocus back on the BTC, highly advisable for you to monitor on this resistance level around 89,000, or you can also focus on the 90,000, support level 86,000. You need to see whether the winner or the buyer or the seller wins up according to this support and resistance level. Short-term basis, we should be expecting the consolidate and do any specific breakout. So monitor on the cryptocurrency and monitor on the Trump, because Trump keep quiet right now, so BTC movement slow down already. And then the gold movement now testing on the support level 2605. the movement will be slow. You can notice it recently. So fully monitor on it, any breakout below will suggest the gold prices to go down, or if they rebound, it might be forming this head and shoulder trend. So also fully monitor on it, trying to combine everything. Fundamental front, we don't have much to support the gold right now, but you cannot rule out any possibility that how will Donald Trump do implementation of tariff affects the overall global economy. So it's a key thing. And then of course, dollar is something worth for us to be focused on it, trying to break above the record high. So we understand it's already break out, but if the data give a positive or negative reading, what should we expect next? Key resistance level for dollar should be 106.75. Key support level, if they really break below, right, maybe you can high until 104.00. So it's a crucial thing. So this is how we combine all the fundamental and technical. Okay. And then yeah, that's all for today. And this is our Telegram group. And normally we'll try to share out some interesting market news every day, a very short market movement, market analysis for you guys every day. Feel free to follow us if you have time and you want to receive more educational information. So this is our Telegram. So I think that's it for today's briefing, webinar. I really hope that you learned something. Now I'm going to open for Q&A sessions. Anything you guys want to ask me? Hello, Debbie, and then hello, Hector, and Mohammed. Yeah, so hello to you too. Now, do you guys have any questions? If not, we are going to end our webinar. All right, I assume no more questions, and just be aware that later 9:30 p.m. GMT plus 8, the US should be released a very, very important CPI report. So be careful on your trading journey. If no question, thank you so much for your time and have a nice day.